Hi, this is Optimus Futures, and we're back with our weekly roundup of key futures markets for our viewers. This week we'll again be starting off with the S&P 500 E-mini futures market. If you recall our analysis for this market from the past week, we had talked about how the market here appears to be a little hesitant to break past this all-time high that the market posted in January over here. We had also talked about how we could possibly see a pullback down to the 2800 former support and resistance level over here before price tries to make a definite attempt to try and test this all-time high over here. We had talked about all this former resistance here turning into support. That's precisely what we were able to see last week as well. The market did sort of pull back and pulled back basically all the way to the 2800 level before it bounced right back up. Again, no surprises there at all. Tons and tons of resistance in the past now turning into support and allowing for yet another launch pad for the bulls to enter the market, and this time possibly inch closer towards testing and possibly potentially breaking the all-time high that the market posted in January. Noticeably, we're still seeing the market post higher lows as well as higher highs, which tells us the trend here is definitely intact. And this recent pullback back above the 2800 level over here after the retest last week suggests that the momentum here is definitely still with the bulls for the most part, and which for us leaves no reason but to expect the market to continue to push higher in the coming weeks. And possibly look to post a new all-time high for this market, which we will be looking forward to. Okay, so the next market we're going to be looking at here is the light crude oil futures market. Again, if you recall our analysis for this market last week, we had talked about how this market had closed at a very interesting location. We had talked about this rising support trend line over here that lines up with a very obvious horizontal support and resistance level at the $1.65 price level. We've had definite occasions where price either found resistance or solid support at this horizontal support and resistance level, and of course this rising support trend line for the uptrend has also been important in terms of holding price up and allowing for the trend to continue. We had talked about all these threatening pullbacks that had started to come into this market over here, and we had also zoomed out the chart to give you a more bird's eye perspective of why price could be creating all these threatening pullbacks into the uptrend at the price levels that they did. Obviously the $1.75 level that's right around here basically lines up with a very, very important long-term horizontal support and resistance level back in 2011 and 2012. The market did roughly around this area, around the $1.75 price level, had created all these really, really significant swing lows over here, and so no surprises at all that as price is trying to push towards the $1.75, this time from the underside, it's finding a lot of resistance at these surrounding price levels. And so the rebound that we're seeing here, or the more extended pullback into the uptrend that we're seeing here, is definitely to be expected. Interestingly, over the past week, we basically saw the market sort of break underneath this rising support trend line over here, which could be an indication that we're probably going to see a pullback more extended than either of the ones that we saw in the more recent past over here. But then again, we're also noticing that the market hasn't really cleared this horizontal support and resistance level around the $1.65 price level as such. The reason we say that is because we're seeing this horizontal support and resistance level more as a thick zone of price levels than a precise round number price level of $1.65 that's creating all of this the support and resistance over here. So for example, if you look at all these lows over here, we can see the market hasn't really cleared all these lows yet. So although we're looking at price, how it basically broke underneath the rising support trend line, we still don't look at this as a typical breakout play towards the downside yet. For that to happen, we'd really like to see the market continue to push a little lower, definitely underneath all of the lows over here before we can expect this market to continue to drop and basically post an extended pullback off the $1.75 level. Once again, that is that really wouldn't come off as a surprise at all, given how all of this bearish momentum here that we're seeing over the past several weeks develop really has just come off the $75 price level, which, like we said and like we showed, lines up with a very long-term horizontal support and resistance level, where price basically posted some really significant swing lows back in 2011 and 2012. So our expectations going forward for this market would seriously just be to expect more downside momentum, but we're not really excited about this market as a typical breakout play just yet, looking how the market really hasn't cleared the horizontal support and resistance around the $65 price level. Okay, so the next market we're going to be looking at here is the gold commodity futures market, which to us was a very interesting market to follow last week. If you recall our analysis for this market from the past week, you'll probably recall that we had talked about all this minor period consolidation just above the 1200 over here. Of course, if you stretch the $1,200 price level over here, it's been an important long-term round number support and resistance level, but in the past we've had a couple of occasions when price sort of held above the 1200 level, and that's precisely what we were able to see over here as well. History in this case did repeat itself, and price sort of started to hold up just above the 1200 price level before eventually pricing its way down. Again, last week when we were analyzing this market, we had talked about all of this downward momentum over here and how the market had broken underneath the 1300 round number right around here, and since then it's just been sellers for the most part that have been dominant in this market. And so we had talked about how we would continue to expect the market to push lower and break towards the downside and possibly underneath the 1200 price level. We did see that happening this week, as the market definitely pushed underneath the 1200 price level, although we're now seeing the market sort of retrace and pull back once again. Possibly this pullback could take us back towards the 1200 level and possibly test this 1200 level now as resistance and see if it can hold its resistance before continuing our way down. Then again, if you look at the more longer term picture or the bird's eye view for this market, you'll probably be able to notice that right where prices bounce right now also sort of lines up with a horizontal support and resistance level around here. We've had multiple occasions when price either found support or resistance at the price level where price bounced towards the end of last week. And that is really to be expected from a market that for the past several years really has just been trading mostly sideways and some short-term swings as compared to long, steady trends. And so that means that as price tries to make a move either up or down, it's probably going to be facing a lot of resistance or support from former important and significant horizontal support and resistance levels and trend lines and other forms of technical indications that could point to the market holding up. So for example, now that we have the market sort of rebounding off the more longer term support and resistance level that you saw us draw on the more bird's eye view on this chart, you can see that the market now could probably find a lot of resistance coming in at all of these former swing lows right around here at and above the 1200 round number, and of course from the 1200 round number itself as well. So by and large, just looking at the downward momentum that we've seen build up on this market, we would typically expect for this downward momentum to basically continue and for the market to, in the coming weeks, try and test this all-important swing low right around here above the 1120 price level. But we do expect that journey to be dotted with a lot of brief periods of trading activity where the market could be creating a wild swing or consolidating or just going sideways as it rebounds and reacts to all of the longer term and shorter term support and resistance levels that are typical of a market that in general over the past several years has been trading in short bursts of solid trading activity followed by periods of consolidation and just periods of volatile and sharp price movements. Okay, so the next market we're going to be looking at here is the euro currency futures market, which was another market that performed exactly as per our expectations last week. If you recall our analysis from this for this market over the past week, we had talked about how we find that a lot of technical traders would possibly get excited looking at this very clearly defined wedge pattern formation or inverse flag pattern, as you would call it. We had a well-defined period of trading activity where the sellers were dominant. Then we saw the market consolidate again in a very defined fashion. We had a clearly labeled rising support trend line over here and a clearly labeled descending resistance trend line over here that marked the boundaries of this pattern. We also saw the market breaking out in a typical fashion. An initial breakout that loses momentum, the market pulls back, held as resistance at the former support level, and of course at this rising support trend line, and then we see the market break underneath hard, exactly as you would expect a breakout scenario to play out. But at the same time, we had identified that we weren't really excited about the move down underneath the this wedge pattern formation over here, and that was because we saw this market basically heading into some very important and significant horizontal support and resistance levels and periods of trading activity that this market witnessed at these price levels way back in the past for several years actually. So if we zoom out of the chart, you can see that the breakout that we had underneath this wedge pattern formation basically leads price straight into all of this very, very well-defined period of extended multi-year consolidation phase, and right where price is bouncing right now basically lines up with all of these multitude of swing highs and periods of resistance that price found. And so no surprises why price is pulling back here. For what it's worth, we could actually even be in the middle of a fake breakout underneath the 1.146 area, and this basically this area of horizontal support and resistance if you stretch it right across to current trading activity over here. So once again, like we said, this market really just behaved as per our expectations. Even though the breakout underneath the pattern was strong, the pullback that we're seeing here is once again to be expected, given how the market is basically now testing some really long-term support and resistance levels. So if this momentum here towards the downside is to continue, we would expect the market to basically hold at the 1.15-ish support and resistance level. We've had multiple instances where price found support at this level, and now the market has sort of broken underneath this level. This should hold as resistance, and a pullback towards this level should allow the market to find resistance and pull right back down, possibly lower than this more recent swing low that we've just created over here for the bearish momentum to continue. If, however, the significance, the long-term significance of the 1.14-ish support and resistance levels is to come into play, we could also see a fake out of the 1.15 horizontal support and resistance level over here, where price could basically trickle right back up and basically then use it as support once again to make a move right back up, so as to respect all those long-term support and resistance levels and that long extended period of consolidation and sideways trading movement that this market witnessed for several years in the past. Okay, so finally we look at the 10-year Treasury note futures market, which for the past week didn't post a lot of major trading activity, at least in terms of vertical price movement, either up or down. And a major reason to do with that is obviously this current phase of consolidation that the market seems to be stuck in. Of course, the market as of now is really at a historic location as far as this market is concerned. Of course, the last time the price was around these price levels, we had a similar kind of a consolidation phase before the market turned around to post a major long-term uptrend. We have a similar kind of a consolidation right now as well, around the 119 or the 120 major round number. And so it is to be expected for the market to be, for the most part, indecisive before we do see that eventual tip over where the market either decides to go up or continue with a downtrend that basically saw us hitting these price levels in the first place. So going back to the zoomed in version of the chart to look at the micro action that basically took place last week, we see that the market is once again sort of consolidating or oscillating roughly around the 120 round number. We have had occasions where prices had either found support or major resistance off of this sort of midterm support and resistance level and the 120 round number, and that's sort of where the market is consolidating right now. We're seeing this consolidation ceiling as this area of resistance over here two very stark instances where price found major resistance at the 121-ish support and resistance level. We're also seeing these two lows over here, obviously a higher low over here, creating a rising support trend line, and we see that this could possibly be turning out into some kind of a wedge pattern formation where the market just continues to consolidate before it squeezes in tighter within this pattern and eventually breaks either past this resistance over here, or we see the market push right back down and break the rising support trend line for a continuation of the move down. As of now, the market seems stuck at these highs over here. The past week we sort of just pulled back underneath the highs over here, and the market really again did not have much momentum at all to allow price to go back towards the support and resistance level, or possibly test the rising support trend line over here. We tried to retest this area and kept doing so pretty much for the latter half of the week, and just sort of closed in a no man's land once again. We're still sort of caught up in this resistance area and basically just oscillating and reacting around all of these short to midterm and long-term support and resistance levels, and just the overall historic location of the current price level really just dictates why the market is consolidating for the most part. And we expect that momentum to really just stay that way until the market really breaks out, as we said, either past this resistance area, or we see the market make a definitive push underneath this rising support trend line, possibly clear all of these lows in here as well. Obviously, we've had multiple instances when price found support around these price levels as well, and so we would really like to see the market really push underneath all of these levels for us to believe that the market is likely going to continue forward and build on the downward momentum that initially led us to this historic location in the first place.